Panel 11, investment trends, longevity, cannabis, psychedelics, AI, blockchain, crypto, and sports betting. So I literally hopped on, I'm not sure if I told you guys I have this like really cool AI chat thing on WhatsApp, and I told me to make me a joke about psychedelics and crypto. And it goes, a psychedelic mushroom and a Bitcoin miner walk into a bar. The bartender asks them, why the long faces? The mushroom says, I'm getting old. My caps are wilting. The Bitcoin miner chimes in and says, I'm getting hot. My ASECs are melting. Ha! All right, well, that's as good as they get, guys. So let's get the speed panel going. But great. So great to have everybody here. This is going to be a speed panel, everybody. Once again, investment trends. Very, very cool. Many years moderating these panels. We've gone through many trends through the past 7 years. But these are ones that keep to be sticking around and are here for the long run. So, interesting. We're going to be talking a little bit about crypto. Obviously, it looks like we have a bit of a bull run. Bitcoin's hitting its highest numbers this year. Cannabis has had an interesting year. 2023, I believe, on average, 90% less capital went to the cannabis industry. AI is obviously booming. But this one, once again, is a speed panel. So each of our panelists, you're going to have one chance to speak. And your timer's right there, 5 minutes. So, we're just going to go right down the line and talk about what you guys are focused on.
I formed an entity called Hestia Holdings with an old family office that's helping work with alongside with us called Cheltenham. That I've historically been more of a real estate investor / credit, but fundamentally formed this new entity because I wanted to look at other things. And I actually just came back from a Silicon Valley summit that was hosted by a group of family offices in San Francisco and Palo Alto. And what I realized is how much I don't know. Okay. And, you hear AI, you hear, there was a lot of discussion on quantum computing, and I realized I will never, ever be an expert on those things. Right, so none of us should fool ourselves and act like we know what AI is when, I know after ChatGPT, everyone became an AI expert. But at least to really focus around things around it that you do know and understand. And so to give you an example, if one were to look at cannabis, I look at more from the lens of lending or real estate because I understand that. If I'm looking at an AI project, I definitely don't rely on myself to rely on a large language model because I'll never be able to understand any of it. But I know someone that came out of Cohere, and what I've realized was a lot of these things that people are doing in AI is just a trend. And I'll give you an example. ChatGPT, for example, it was really scary when you think about it when Sam Altman almost left, and we were joking about this a couple days ago. People were afraid, wow, this $90 billion company could have been worth who knows what, right? Because Microsoft was ready to take out that whole team. And I don't think people realize that a nonprofit company can't really be both nonprofit and for profit, right? But people were just saying, oh yeah, 100 billion, let's do it, right? And so I think, again, fundamentally understanding, it's not about being trends, it's really trying to understand fundamentally what it is you're about and you believe in, and then try to figure out where you think you fit in. And then I think, the other thing was psychedelics. One of my, a friend of mine, I was exposed to that a couple of years ago. He sold Good Doctors, and I remember we were having a discussion when I didn't really know what it was, and he had asked me if I had found myself. I was like, what are you talking about, David? And then he started just going into this, and I think that, again, the science is early. And so really try to, separate again the difference between what is a trend and fundamentally where you think there's value. So that's how I think about these topics when I invest in it.
Got it. And can you speak to kind of when you're looking at these potential deals, how you guys are kind of running due diligence to pick the right options to spend your time investigating?
Yeah, that's actually funny. So we had invested in a company that was a Series B that pre-ChatGPT, I was so scared because I thought the company was going to go to zero. They were running out of cash. We were trying to figure out what we were going to do. And then ChatGPT came out and they started getting all these offers. I was like, bro, you better sell this thing right now. Let's not forget what we really went through for the past year. They got a capital injection and the founder wanted to stay through it. And so I understood where that person was coming from. But through that, it's moving so fast. Anyone that tells you that they really understand it, they don't. And that really got crystallized to me when I did this trip. So I think, when looking at things like this, really try to find someone that you can lean on that has an expertise. For me, I relied on someone that I knew from Cohere that explained to me, what to really look for, and I provide that because it is moving fast. And going back to the example of OpenAI, where they are spending like $2 million, like a day on CapEx, right? How do you have like a $90 million, a month on CapEx, right? So really understanding those things. And so that's the key thing. Really try to get someone, whether you go through a fund, really understand what their experience is, because if they just popped in when ChatGPT came out, I wouldn't trust that person's expertise.
We typically invest in crypto, blockchain projects, real estate, health tech, sports, or entertainment. There's no preferred structure or anything to that effect. We do direct investment. We're comfortable doing that. Since all of our family members are former tech and former programmers, as well as folks who've been in the entertainment industry, things like that, we consider ourselves not experts, but knowledgeable about the industries we get involved in. For us, one of the most important things that we look for in an investment, whether it be AI or any other, is an exit strategy and a team. We look at the team to see whether or not the team has a deep bench, per se, to see whether or not they actually understand, because we sit down with them and talk to them about those crypto projects, talk with them about AI. We're also looking for that exit strategy. One thing we have in our family office, when we sit around the dinner table, the first thing we say is, don't fall in love with the investment. We're looking for the exit. We're looking for the door. We want to make our money and get out. And that's, some people have a long-term horizon. Some projects we do if they look good. Most of the time we want to get in and we want to get out. Now, for the standpoint of OpenAI or an AI, we see AI as a feature. We invested in a health tech company, new EHR system, things to that effect. And we saw the AI being a feature, not necessarily something that is all encompassing of the actual product or the product itself, but no, a feature that allows the doctor to dictate notes, and those notes are actually generated from AI, or goes through AI to set up the billing and things to that effect. That's what we're looking for AI to do, be a feature, not AI in and of itself to be everything. So when we look for projects, we're looking along those lines. Nobody's going to sit back and compete with Microsoft, Google, and some of these others. I'm not looking for that. I'm looking for a project that wants to be AI, from AI as a feature, not necessarily AI focused. When it comes to, and you forgive me, I write down a lot of notes. When it comes to crypto, from that standpoint, yes, Bitcoin will have a spot ETF. I know it's on a lot of people's mind, and that is going to happen, as well as Ethereum. And I would say probably within a year, you're going to have an altcoin ETF. Now, the reason why I say that is because the SEC has, I've got 2 minutes, so I'm going to be brief. SEC has chosen not to actually go after Grayscale again. They decided not to appeal. The regulatory climate is getting more favorable to this. We've gotten, from the standpoint that SEC is now meeting with some of those ETF applicants. We see SEC changing its overall idea of what these ETFs for Bitcoin and crypto look like. So that's important. Also, we see the regulatory climate changing rapidly. Within the next 2 to 5 years, you're going to see a significant structure around crypto in terms of regulatory. Why? Because institutional investors are getting in and they want that stability. Now, while you would say, Greg, you guys are an institutional investor too. Yes, but we're tech guys. We came into Bitcoin when Bitcoin was You know, we came into Bitcoin a while ago. All our stuff is on hard wallets. We don't do ETFs from that standpoint. But I understand finance, I understand that most institutional investors will get to that point where they're going to use those, and they're going to need that stability. We prefer the volatility, but that's okay. Everybody's different from that standpoint. Also, you've got a flight to ETF. From my understanding, when 10 years ago, ETFs amounted for, 13% of the financial market. They amount for 30% of the financial market now. People are going towards the ETF climate. So you've got that. You've also got significant upward pressure on demand. Demand for Bitcoin and crypto is going up because people are now seeing it as a viable investment option. It's being compared with gold now. And being compared with gold. Bitcoin and gold share about a 0.6% Pearson coefficient together. So they're pretty much moderately correlated. So we're seeing a significant push toward that as digital gold. I'm good.
Fantastic. Thank you so much.
I guess I'm here. My hat is Vernonville Asset Management, where we do a lot of commercial real estate, private debt, and some angel investing. And then I'm also a founding partner of Urban Capital Network, which is a venture fund, all based out of Houston, Texas. I'm here to talk about kind of the cannabis space in terms of what we're seeing. I'll tell you right now, first and foremost, I don't know anything about publicly traded cannabis and stuff of that coming out of Canada. We're kind of on the ground, want to invest directly in companies that are either producing, cultivating, things of that nature. I'll give you a little bit about my journey and kind of where we sit right now and what my partners in our portfolio companies are seeing currently. And so I started in the space looking at the cultivation side. We own some coffee plantations in Panama. My partner's there. We have a whole kind of agricultural team down there, botanist, agronomist, all that kind of thing. They looked at purchasing a grow farm in Humboldt County, California. This was 4 or 5 years ago. One of the first licensed farms. We diligenced that, quickly realized the gray market was still a higher kind of sell point than selling legally into the standardized market. So we looked at that and said, you know what, this is still going to be rife with a lot of graft. We don't want to touch it from that particular standpoint. I had a college buddy who became the chief marketing officer for what essentially became a nationwide CBD cream with a very novel process through which the penetration into the skin could happen. One of the founders, pharmacists, they were out of Colorado. And so what they understood very well was the CPG side of it. So then I got to see not just the cultivation side, I got to see what does it look like trying to sell finished product and finished goods in a marketplace. In under 3 years, they were in 9,000 stores across the country. The problem was GNC was their number one client, and they couldn't collect anything from GNC. That company didn't end well because GNC didn't end well. So they were able to sell, they were not able to collect. So lesson there, great team that could sell but couldn't collect the money. Get a CFO on your team who knows how to collect money. And so I went through those 2 iterations personally. And then on the real estate side, we were diligencing a industrial park that we ultimately bought, walked through, and there was a company in there that was the largest and oldest hemp processing manufacturer in the state of Texas. So I'm walking through there with my partners. They have a CO2 tower outside the back. They essentially have an explosion-proof room. I see beakers, like I'm back in chemistry class. And I'm walking through just marveling. They're WADA certified, all of that stuff, anti-doping, they're kosher, everything, right? And so I'm walking through this marveling because I can see exactly what these guys have built. And I'm like, I told my partners, hey, if these guys have an equity round, we want to be in this because if Texas goes legal, if Texas goes medicinal, they're going to be set up to do that. Fast forward, we were able to do that. And so another lesson around that is look at your other investments. They may lead you to other investments from that particular standpoint. And so from a philosophical standpoint for me, what I'm looking for is states that have high regulatory barriers. I want the government on my side giving me kind of a free lunch for a little bit of time, because ultimately all this stuff is a weed and eventually we'll all be able to grow a little bit ourselves. And so with knowing that, you're going to have a finite window in which to create high margins. What we figured out is high margins in descending order come from finished goods, white labeling, processing, and then lastly, kind of the cultivation side of the world. Next, you want a team that can execute and pivot. And for us, we want vertical integration because you can control your costs. Because costs ultimately are going to go down because, again, this is essentially a weed product. And so the question will be purity, can you control your cost, and can you get it out there? And lastly, just so you all know, the real growth right now is actually in the beverage seltzer space. If you're not paying attention, craft brew is down. And so some of these companies are trying to fill that with Delta 8 and 9 beverages, and those are selling super, super well. And so our portfolio company just acquired a brewery that wasn't kind of doing so well. And so they did that because they were doing a canning partnership with them, but realized that they needed to control it, and they could control their costs better than the brewer could. So they just acquired them from that standpoint. So big thing is regulatory control, vertical integration, beverage. That's kind of how we're looking at cannabis on a go-forward basis over the next 5 years.
We're based out of Sarasota. We're a private equity venture development firm, so we're a little bit of a hybrid. I grew up in startups, started in life sciences with a startup within J&J and had Kleiner Perkins and Sequoia and a .com that got acquired before it went public, and then jumped into as an investor in a pediatric implant company. No one was doing stuff for kids with orthopedic issues. So we jumped in. I didn't know squat about orthopedics, but I knew how to put together good teams. So we assembled the top doctors in the world for pediatrics, took their orders, and it was one of the most successful IPOs a couple years ago. It's a global leader now. So I went off on my own in 2010, started Perham. We're global, but we do early stage pre-revenue and revenue companies. We have one that's doing 10 million in top line, medical clinic. We have some stuff that's really early stage, but we don't invest unless we can get involved. We focus on the team first, technology second, never get those in reverse or you're gonna get bitten. And we won't invest unless we can actually move the needle. Like we do a heavy due diligence. Usually, for 10 years, we did no marketing. Everything was word of mouth for 10 years because we get called by private equity, family offices, and I'm going, hey, can you fix this? Like, check this out and help us out. So we were having 20 to 30x returns on invested capital into us to fix companies. So we started investing our own, and we've had some really good runs. Our focus right now in the longevity space, I'm a health and life science nerd, but is in bioidentical hormone replacement therapy. We're launching a deal next year with a global leader in the space, telemedicine right to your door, electrotherapy, neuromodulation. I'm a non-pharma guy. So I want quick regulatory, want in-market revenue in 6 to 12 months. I want to be out in 3 to 5 years. So we're focused on that. And then the cannabis space, we don't do dispensaries or anything like that. We kind of missed that boat. But we focus on medical grade. So strong IP, a device, can it be delivered differently? One of the deals that we have a small stake in, but they have IP on a nasal delivery system. So if you've ever tried to deliver cannabis to your sinus cavity, you're going to burn your sinuses out. These guys figured out the formulation to do that. They launched initially, and they have revenue with a essential oil base. This is all plant-based, no HCl, no hydrochloric acid, no rebound effect. They're knocking out Afrin, Flonase, all these types of guys without burning. So they have IP on the device and on the formulation across all cannabinoids. So we're very bullish on those guys. And then in crypto, I did jujitsu in St. Kitts when I lived there for a while with Roger Ver, but I missed the crypto bandwagon. So we're focused on tokenization. So there's a company out of Singapore called Chintai. We've helped them out a little bit, but they can tokenize real world assets. So real estate, carbon credits. They work with a lot of family offices where you can tokenize assets, eliminate the middleman, and go right to secondary market. And then on the sports side, so not sports betting, but say sports medicine, orthopedics, like how do you eliminate pain without narcotics? We're involved with a company right now that can deliver about 20,000 hertz of electricity. You don't feel it, you don't see it, it's not a TENS unit, but it could take a 10 pain score down to about a 4 in about 10 minutes. And then we're seeing in Parkinson's patients, again, hope nobody's from the FDA is here, so I'm not making any claims, but we're seeing pain scores drop significantly, and then also people with Parkinson's. So we know there's a neuromodulation effect. So we're seeing people with tremors stop for 8 hours off a 10-minute session. So we've helping them launch into all the children's hospitals. The former head of Shriners is a business partner of mine. And then into all the VA hospitals. We've brought a lot of technologies to the VA and the veterans in regenerative medicine, longevity, and stuff like that. So we can move the needle very, very quickly for these companies if it fits our sweet spot. And then on the orthopedic side, total joint replacements, huge market. We're partnered. We actually have a large stake in a company. A couple Florida founders. The 3 founders have about $3 billion in exits. No losses in startups. The worst return was 10x. The best was 80x. We believe they have the unicorn that could potentially eliminate or reduce the need for total joint replacement in about 85% of patients. So I'm heading to Gainesville next week. We're doing another study, but it's a wearable. No drugs, no surgery. Reprograms the brain and the muscles around the knees. So I'm bullish about what's going to happen on the life science, plant-based medicine. Haven't done psychedelics yet, but anything that could leverage the body's ability to heal quickly is what we're interested in. So, and I love this group here. I was invited to speak at the Capital Titans deal back in August and got to meet some folks here. And so we typically work with family offices, high net worth individuals, because most of you guys are entrepreneurs or have made it, and you bet on the horse and the jockey. And so appreciate the time.
Fantastic. Thank you so much, Greg. Moving on to Sylvia.
So you haven't done any psychedelics yet. I'm here to tell you it's the perfect time.
Just looking for the right deal.
I have a really long history of being involved in psychedelics because I was trained actually as a shaman from the time I was 19 years old when I was living in South America. So I have direct experience working with plant medicine. And the first thing that I want to share is there's a reason why they're emerging into our collective conscious and why there is this thing called the psychedelic renaissance happening. And that is actually quite intentional. If you look back at the history of psychedelics, ayahuasca has been used for thousands of years in the Amazon and is a pillar of the culture for many tribes there. About 30 years ago, some of the elders of the tribes that were holding this wisdom most closely actually had a little tribal convention and decided that it was time to let ayahuasca come out of the jungle, not just the brew itself, but the shamans who were the keepers of the wisdom that this brew contains. And so the psychedelic renaissance is quite intentional. This is something that there are actual real elders that have put their energy and prayers behind, and mostly because they decided that we in the West are really pretty messed up and it was time. So the question is, how do we responsibly as Westerners, so to speak, and I'm using the term Western in the most general way, how do we ethically capitalize on that? And so if you're going to enter into psychedelics as an investment theme, the first thing you should really ask yourself is, where's your ethical compass when you are looking to commercialize these technologies? And what you're basically going to see, I'll break down years of research for you into 3 categories. There are really 3 different investment themes. And your suitability to invest in these themes really comes down to what your investment background is. So the first is the most obvious, which is drug development. And I really believe that you shouldn't be investing in psychedelics on the biotech side unless you really understand biotech investing. It's no different from any other kind of biotech investment. They're going to require the same kind of clinical trials, the same IP, the same amount of capital to bring to market, and you need to have syndicates of other biotech investors on the cap table for these drugs to become successful. You can't have, no offense to the crypto guys, you can't have a bunch of crypto dudes investing in these companies and then see them get FDA approval and go to market because they're biotech companies. And so there are good examples of that. One company that we invested in is called Beckley SciTech, and the team that is behind that brought Spravato to market. That's a Johnson & Johnson nasal application of ketamine. And one drug that they're working on right now is a nasal application of 5-MeO, which is known as Bufo. It's like a toad venom. And it's one of the fastest, quickest acting psychedelics, and it has really interesting research behind it for the treatment of clinically resistant depression. So that's the biotech thesis. And then the second is retreats. So you're going to see a big like kind of surge of retreat centers. There already are legal retreat centers, primarily in Jamaica, the Netherlands, and then also in Costa Rica. And the retreat thesis is a good one to enter into if you have a hospitality background. These are hospitality businesses, and this is in many ways psychedelic tourism. But we're also seeing a big influx of programs for vets. So over Veterans Day, I actually facilitated a retreat in Jamaica for a group of veterans. So that is a really interesting theme to work into if you understand hospitality. And then the third is really the consumer, and the consumer is going to be microdosing or just recreational things like chocolates inside of mushrooms. And that's, I think, is going to be a very different investment theme. I think it's Cannabis 2.0, and it's going to really follow the decriminalization on a state-by-state basis, very much the same way that cannabis did. So if you've had luck playing in that space and you understand the consumer, the microdosing that I think is going to become very, very popular is something that's called the Stamets protocol. It's a mushroom microdosing protocol that uses nutraceuticals that a lot of people feel like helps with creativity. It's a great substitute for Adderall, and it apparently helps with neural regeneration, like neural pathways rewiring. And then, of course, there's a lot of people who can testify to the fact that there's much better do a little mushroom chocolate than alcohol at a party. And so you're going to see tons of consumer products developing that are actually meant for us just to have a good time. So thanks.
Fantastic.
Focusing primarily on venture capital and growth equity. I'm just going to talk about what I'm really excited by. And I would like to say now is the best time to be investing in VC. Yes, it's a down market. Yes, there's valuation compression, but coming in now is super advantageous for both LPs and also for direct investors. The 2024 vintage funds are going to be some of the best performing funds in the next decade. To that end, we are very bullish on investing in emerging managers. We define emerging managers as fund ones to fund threes, and these can be people who are serial entrepreneurs. These can be people who have a career in VC as a general partner at a larger fund and spinning out to have their own smaller fund. Or it can be somebody who has worked their way up from analyst to principal, and then instead of continuing on to be partner, wants to have their own smaller vehicle. There's a lot of alpha in investing in emerging managers because they really work to build LP-GP relationships. I think like if you're a family office or an allocator trying to enter a venture and you're thinking, should I try to fight for like a little slice of the pie of a large fund, like one of those large, very well-known multi-billion-dollar funds, or should I try to invest in a manager that has a fund of 100 or 200 million? I would definitely recommend going for the 100 to 200 million fund because you will also be able to get great co-investment opportunities. And you'll be able to have a closer relationship with not only portfolio founders, but also the GPs. Another area we're really interested in is emerging markets, both domestically and internationally. Domestically speaking, I'm from California. I live in New York. Our headquarters for the family office is in Florida. But, there's a lot of other areas within the domestic United States that we are very excited by, including the Mountain West region, Colorado, Idaho, the South, North Carolina, South Carolina, Texas, and the Midwest. I think as we notice there's a down market and we get valuation compression, there's going to be a lot of advantageous deals happening in these secondary and tertiary cities. A COVID tailwind means that we have still hybrid remote teams, and because of that, there's a lot of opportunity. And you don't need to be building a company in Silicon Valley in order to have the top VCs investing in you. Speaking to like what a lot of the other panelists spoke about, psychedelics. We've been invested in biotech at both the fund and company level on both the public and private side. We have a huge public equities portfolio as well. Personally, I first got interested in psychedelics back when I was a student at Oxford University, a grad student. I was part of the Psychedelic Society. And I saw that there was a lot of overlap between the Neuroscience Society, the Psychedelic Society, and the Mental Health Society. They would share speakers. And then I started to do some research, and I realized that there's not only a pharmaceutical pathway for a lot of these investments, meaning there's a clear monetization, which might be controversial for some of the other panelists, but I believe it gives psychedelics an edge over cannabis. Definitely the biotech angle is why we're particularly excited by it. But additionally, I think there's just a lot of positive applications and impact within the United States. There's a bipartisan push within our government with both Republicans and Democrats to support the legalization of psychedelics and psychedelic use in the military. Currently, there's a lot of Navy SEALs who go abroad to get treatment. And the fact that there is a push in government, a bipartisan push, I feel like that means that, legalization on the state-by-state basis, we're moving in the right direction. In addition to being really excited by psychedelics and just like frontier technology, we're excited by both the companies but also by funds. I think something we've noticed is there's a lot of newer funds cropping up that are emerging managers, sector-specific funds, maybe in longevity, psychedelics, frontier tech as a whole. And we feel like there's a lot of GPs that have really advantageous backgrounds in these niche sectors and are able to apply that to helping their portfolio. And that's what gets us really excited about these sector-specific emerging managers. To that end, we're also excited by climate tech, and I would say especially climate tech and how it relates to the built environment and prop tech, but also climate tech and how it relates to fintech. And we're also looking at AI beyond the hype, so not looking too much into the large language models, but really drilling down into AI and the application layer and infrastructure layer. We really believe that it's here to stay, and I think for us, whether we're investing in psychedelics, climate, AI, the most important thing is to look beyond hype, future-proof our own portfolio on both the fund level and company level, and think what are some long-lasting sectors and trends that are going to be around in 10 or 20 years. But if you're raising for a company or you're an emerging manager raising for a fund, I'd love to speak to you.
Awesome. Me too. Thank you so much, Sasha.
Yeah, sorry.
Real quick.
Yeah, I'll make it real quick. I'd ask him. So at first I thought that we had to address this, but if the question was, what do I think are the best ideas? I'll say two things right now. Number one, credit. I think you can go into credit investments because there's still liquidity issue. I think there's a window where you can get VC-like returns, but you have assets, right? You can buy first liens, second liens, which you call term loans that are in collateral, where the CLOs have to get rid of the position, and you can buy them at a discount. And it's a running, operating company, but because there's an issue with the market, where treasuries are, et cetera, even though treasuries have gone down, I think right now that's excellent. The second thing is right now, is just right now, I believe, is in secondaries, especially in fund life positions that are running out. In particular, take a look at, because the US is forcing Chinese LPs to sell their stakes in funds. It's a strategy that I've been studying. But in that situation, because they have to sell due to security, like national security positions, they're selling at discounts. So if the question was what are the best ideas, those are what I think are the best ideas right now.
Awesome. Ladies and gentlemen, if we can please give a round of applause to our 11th panel of the event. Thank you so much.